So let's talk about Disney. This is the monthly chart. And Disney has been, to say the least, a disappointing stock for investors over the past years. As an example, over the past 5 years, the shares are down roughly 2%, while the S&P 500 had a total return of roughly 100%. Now, many point to Disney Films as the biggest disappointment. However, it's been actually their cable division in the era of the cord cutting. Now, before we get into analysis, let's look at a couple of reasons why you may consider buying Disney. The first one, the moneymaker of Disney's is parks and experiences. Over the past 12 months, the company has generated $33 billion in revenue and $9.5 billion in operating income from the experiences, accounting for more than 90% of the total operating income. And there's both a moat and a growth potential now that Disney plans to invest $60 billion in its parks over the next decade. Then you got number two. Everyone in media is trying to get into streaming, and Disney has the chance to be a huge player alongside Netflix, who is the 800-pound gorilla in the room. But unlike Netflix, Disney has its own IP and a sports play. Disney streaming businesses has 186 million subscribers, 111 million at the Disney Plus core, 50 million at Hulu, 25 million at ESPN Plus. That's less than the 260 million subscribers at Netflix, but Disney could catch up now that it's bundling Disney Plus with Hulu and will include ESPN over the top when that launches next year. Now, while Disney's streaming business is still losing money, management expects to be operating income positive in a few quarters. And we can't forget the size of Disney's streaming business. It generated $5.5 billion in revenue last quarter and grew 15% compared to $8.8 billion in revenue and 12.5% growth at Netflix. Then you got sports. First, it will launch a sports-only bundle with Fox and Warner Brothers Discovery, which could satisfy the need for some customers. But the bigger vision is making ESPN the go-to home for sports. Now, in the recent fiscal Q1 2024 conference call, the CEO said ESPN is going over the top in fall of 2025 and will include integrations with ESPN Bet, fantasy sports, e-commerce, and live stats. This could change the way fans watch sports and may mean that the company becomes the leader in streaming sports. Alright, so kind of going back to the charts. Price did dip its toes in this monthly buys level at $74. I thought price was going to penetrate this zone deeper, but nevertheless, investors found price at $80 to be a huge discount. Not only that, but $80 is a round hole psychological number, which Wall Street likes. Nevertheless, price surged, created this bull flag. We had a close above the bull flag on the weekly chart on January 16th, and it has been smooth sailing ever since. Now, when price was sub 85, I said $100 was my target. As you can see, price blew past that. And when did it do that? On earnings, which was on February 7th. So now you have a slight pullback. Will price fill the gap? It's possible, but it's more likely that price is going to move higher. Again, Disney has underperformed the major averages over the last couple of years, and I envision price moving higher with a target at the daily sellers level at $135. Thanks for watching. Subscribe. Please like the video.